Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Yeah, I'm muted. See how off I am here? My gosh. Okay, so U.S. initial jobless claims 201 versus 225. I'm trying to sort out here. So part of the reason why I'm a little bit late is that I've got a position on in the 10-year. In fact, if I pull up my thing over here, it says that I still have it open. But it's not showing up on my DOM, and I don't know how to get it to show up. If I switch accounts, it doesn't change. What if I do this? That still doesn't do it. Okay, well, let's ignore that for a moment and look at the charts, okay? So, yesterday, Treasury's taken a pretty big dive. I don't know, if we zoom out here. So we are now well below these lows from August. So we have to come back out here. Okay. Just want to note, 108 is like a critical level from like a way long time ago. I don't know why I have that drawn on my chart, but it is there. It was like a really key level back in 2017. Probably will see some reaction to it if we get down there today. Not that it matters too much, but that's just kind of like your baselines. Here's the E-mini. Oh man, taking such a dive yesterday off of the hawkish Fed and like continuation lower. I saw a lot of people on social media yesterday, by the way. They were like, oh, this is BS. Like, you know, the Fed isn't the only thing that matters, etc., etc. I was like, well, yeah, but they're probably going to continue selling for a few days, okay? Like, there's a pretty big gut check to the market, okay? Oil also falling yesterday, but, you know, they're trying to dig their way out. I'm still of the opinion that we will ultimately get to 95, but that we're probably going to rotate around 90 for a few weeks. Gold and silver getting just savaged. Luckily, gold had pumped before the Fed meeting. Otherwise, maybe it would have been worse. I don't know. Copper. Oh my gosh, copper just getting creamed this morning. Okay, so basically, the copper, I think, is a key tell here, right? Because the market is basically saying we're seeing a big slowdown coming here. Like, the Federal Reserve is keeping things tighter, going into a period that we see as weakness. Okay. Now, you can also see the weakness in Bitcoin, although there's still they're still above, you know, kind of the support so far. And the dollar getting stronger at the expense of everything else. Okay, so let me come back over here. Open account data window and flatten with the right click of a mouse. Oh, you mean like you come in here and no. Maybe you mean take out this little thing and hit flat. I don't necessarily want to flat though. I want to leave the position open and just see how much money I'm making from it. So let me try one other thing here. What happens if I just open a new DOM? So if I say this is my serious account using ZN here, December 2023. Okay. And then okay, I'm not seeing, doesn't look like it is working. Add the order column. Appearance. Show P&L. Yeah, that's weird. Email Jigsaw. Well, yeah, we could do that. I think the only other thing I can do is try and restart Jigsaw and see what happens. Let's try that. Let's see here. F747, a couple of things. Oh, most of this is stuff that we know. I don't know if I really need to read this stuff out. Bloomberg on Economics and others anticipate that headwinds looming from a range of things, including the auto strike, will persuade the Fed to hold. Yes, we need to get into that. We do need to get into that. Actually, it was on Zero Hedge as like a paid for story yesterday. I mean like a private story, like you have to be a subscriber to get it. Their title was "Ignore the Hawkish Fed. Not only is GDP about to tumble, next week it will be revised sharply lower." So it's not just that there's some headwinds coming in. It's also that the Fed is making their calculations and assertions off of a GDP number that is about to get revised significantly lower, right? Which could change their opinion on things like, do we need to raise another time this year? Would be the first key question. And then do we need to, I don't know if I should really put too much stock in whether the Fed says that we're going to lower 100 basis points or 50 basis points next year, because the Fed isn't very good at predicting the market that far ahead. I feel that they are just too how do I explain? What they do is so important, that what they say they want to do affects the markets. And as a result, there is a strong incentive and bias on the part of the Fed to always paint a rosy picture, essentially. Right? And I would put it, I hate using this terminology because I know that it will probably rub some people the wrong way, but there is a large degree of holistic thinking on a committee like the Federal Reserve, which is to say, these guys are not necessarily sitting down and saying, okay, I'm going to do all my work and this is what I think the economy is going to do, and then I'm going to post it, right? Most of them are not doing that. One of the things that is going to color their thinking is, but what are the other people on the Federal Reserve going to do? Because if I think that they're all going to come in here and then my estimate is like way off, everybody's going to think I'm an idiot, right? And that's why you end up with these economic projections and even things like with the research analysts and so forth that just are not in line. Like they're not realistic. They don't come out that way. Dude, even restarting it did not change anything. It wasn't serious. I think there's one other thing you can do is like, resend trade stats maybe. Nope. The bottom line from Powell was not to rely heavily on the projections. Yeah. I know. I have to say the whole thing yesterday I thought was really funny, frankly. Frankly, it was really funny because I said here on the stream in the morning, early on, like right from the very beginning, I said, I think that the projections that the market is expecting, and I wasn't basing that on the market expectation is 100 basis points of easing next year. Sorry, I wasn't saying that because I knew that market thought it was going to be 100 and I thought it was going to be 50. I just knew that the prices that equities were pricing based on what they thought interest rates were going to be was unrealistic. I just knew that you can't have the market be so strong and have interest rates come back that much, that as much as the equities are pricing. And so at some point they're going to get a gut check, and it happened. So, can you know things that the markets have not priced in correctly? Yes, you can. I would not recommend making bets on Federal Reserve meetings like that. But, because if you're wrong, that can be your account. Okay, but that was an instance where we could have made a call that would have made you a ton of money. You know, if you had the risk, to, you know, if I had $100,000 to day trade with, I totally would have done it. Uncheck the today in positions. Oh yeah, there's definitely, you can do that. I don't know if that, I mean, that doesn't, so that definitely makes the position windows look correct, right? But I can't figure out how to get my instrument here. Enable, disable placing orders. Maybe I need to go, like, what if I go ZB first? What if I switch it to ZB? You know what else? I saw this thing over here I should do. Clean expired symbols. Clean. Yes. Cool. That'd make it a little bit easier. Okay, so now it is showing me ZB. And now if I switch it back to ZN, does it pick up my position? Doesn't. Okay, we're gonna try one more thing. This probably won't work either, but basically there's got to be some code that says, okay, am I in a position? If I'm in a position, then I need to do this and start drawing all of the things and stuff. And like that code is not getting called. I want to make sure I'm doing this on the right one. I'm in experimentation. So then if I switch this to be like ZN, and I'm on the experimentation account. I click OK. Okay, so now I got ZN again. but it's in the experimentation account. And now, if I switch and I say serious account, oh. No, I'm going to ask Jigsaw Chat. I mean, what I could do is I could just flatten it and then... All right, here's another thought. What if I just put an order out here? Okay, that doesn't do anything. Why is NinjaTrader... what makes you say that NinjaTrader is encouraging traders to trade treasuries? Okay, the other thing that I could maybe do is I could try... I will buy here. That should take one contract off. Aha. Okay. And then it refreshed. Oh, well, as in with the competition, well, that was not... I mean, that was not NinjaTrader. That was the CME. The CME ran the competition. Now, the next competition that they're going to do is going to be in the equity markets. So... Well, you know what? I'll leave it like that. I'll leave it one contract on for now. Okay. I kind of feel like we've had so coming into today, my plan was look for an opportunity to sell it. But if we're having selling overnight and we come in and the news that we sell and everything, like I feel like you already had all the opportunities to sell, and I'm having a hard time seeing there being more liquidity at this exact moment for me to sell into. And it's just not a good position to do it. I think it makes sense to to take one contract off at least. I don't think so. I think that here's my theory on why they did it that way. So I have two theories, okay? Theory one is that they will periodically run a contest and they just rotate between instruments. They did one with oil a little while ago. They've done it with equities, and it was time to do it with the treasury market. Okay, so that's theory one, and is probably the correct reason, right? Theory number two is that the guy that they do these contests with, Jim Miorio, is a treasury trader. And so, of course, he wanted to do the contest with it as treasuries. I tell you what, it would have been so much more fun if the contest had been this week instead of last week, right? Because last week they didn't really actually do anything in the end. It's very oversold here. I kind of feel like it is. Now, that doesn't mean, by the way, just you be very careful about this, because what happened yesterday was a situation where there's going to be a lot of big guys positioned the wrong way that are going to have to do something about it, right? So something that happened yesterday that that I think was very unusual and is kind of a little bit of a warning for today. And I said this at the end of my stream, but a lot of you weren't here. After the market closed, the treasuries continued selling off. Like we closed at like 108. And then there was like just before the close or just at the close, there was like a little bit of a stop run afterwards. I kind of wonder if that was not like a broker saying now, like, okay, we have to dump you, right? Because it was like 6,000 contracts just flooded through all at once to push us through 108, which was a little crazy, right? And then after that, after the market closed, you continued seeing strong flow selling into it, right? So that is, to me, some people that are really desperate to sell. Because I tell you what, if the Federal Reserve next year in 2024 only reduced rates by 50 basis points, or maybe they don't reduce rates at all, frankly, okay, these treasuries are not correctly priced at all. These treasuries are not correctly priced at all. So, yeah, this could be a multi-day move here in the treasuries, and this could be a multi-day, if not multi-week move in the equities market, because, like, quite frankly, the valuation. Let me show you this. This Zero Hedge keeps posting this chart, and a lot of the time when they make assertions about these sorts of things, I think that you kind of have to take it with a grain of salt to some extent, okay? But there's this disconnect that they've been tracking for quite some time that I think is important. Where is it? It's going to be at 2 o'clock. There it is. So the thing that they keep pointing out is that since about mid 2022, when interest rates kind of like backed off, the equity market has been rallying like crazy, and much more than their historical correlation over the last few years with the interest rates. And then when the interest rates started going lower, the equities were not affected. So there's this huge gap between what the equities are pricing for valuations and what the treasuries are pricing for valuations. Now, there could be a reason for that, but personally, I think that the equity valuation is a little bit rosy. And so while there might be some things about the liquidity in the short term that says to me it's going to be a little bit difficult for us to go short here. Okay, because what happens is everybody's short. And so then you get these, like this move that we just had up to 12. I mean, that's got to be like short covering and stuff, like profit taking. And you'll just get like these really volatile moves on the profit taking and everything. When the market like starts to turn into all one way, what ends up happening is, like if it's the equity markets and it's going up, like, yeah, overall, it's going to be long. If you get in and you stay in for a really long time, you're going to make money. It's going to go long. But on the short term, it's going to be super volatile, like way more volatile than you think. And the downsides, like when it sells, it's going to do so extremely aggressively and stop you out. Right? So you can see the same thing here in the treasury. Like the call is short treasuries, but in the short term, you're going to see like really violent flows against it because basically like everybody's short. And that results in a situation where on the short term, there's only people to buy, right? So I've got to be careful about the price that I pick. I can't just buy the high here in this situation, especially after we just had news and that was all they took, you know? Yeah, I think that if I'm to go short, I got to get a better price than that, or there's got to be some real oomph to it, you know? The easiest time frames to predict are 1 second and 1 year. Yeah, I think you're probably right. You're probably right. Oh, it's Jiwi that's saying that, so yeah, he would know. One of the things that I'm curious about. Okay, so, and this is kind of what I was thinking about this morning, and maybe was why it took me longer to get ready than it probably should have. Orders have strong impact. So, one of the things that you'll see a lot of traders say is, like, just look at what the crowd is doing, right? If you know that the crowd is about to all go in through one way, the sheep are just about to all get screwed in one direction, and you can take advantage of that. And it's true. That's like when the biggest trades that you're going to get is when you're positioned against the crowd and the crowd ends up being wrong and you end up with all of their money, right? Those are the biggest moves. But I really feel like that the way to beat the crowd is to not care what the crowd is doing. Is to do your analysis and predict the flows regardless of what everybody else thinks. Those, like this whole thing we were saying about autistic versus holistic thinking. Like, the autistic person does not factor in social cues and what other people think into their analysis because they don't pick up on those cues. They just think about the pure logic, and that ends up being an advantage in their case, right? Whereas the holistic person thinks about what everybody else thinks is going to happen. Well, that could be an advantage too, because trading is ultimately like predicting what other people are going to do, right? Well, the problem with like trying to follow the crowd is that one trader can be bigger and have more contracts than the entire crowd, right? That's the real problem here, is that the impact of orders is really strong, and the meta orders out there are significantly larger than the available liquidity. So when a large meta order comes through here, you get trend days. It can be multiple days. It takes a long time for them to execute these trades. And if we know that these trades are taking place, we can take advantage of it. That's the way that I try and trade, is I look for situations where I think that there's going to be an imbalance, that there's going to be a big meta order that I can follow. And that's why I'm kind of a little bit of a sniper, because meta orders happen every day, but I might not necessarily know about it. I wait for situations where I know that one is coming based off of what's going on in the market and what I know about these guys' strategies and stuff. Right? So on the short-term basis, essentially, all of these things about patterns and all of the other nonsense that you see retail traders talk about are pointless, because one trader will destroy your pattern. And there's so many of these guys out there that can do that. It makes the pattern worthless. Even if there is a tendency for the market to do a certain thing, it practically makes the pattern worthless. The only thing that is of any worth on a short time frame is knowing what the future orders are going to be, knowing that there are people out there with large meta orders to execute that you can front run. That's the only thing that matters. On a longer time frame, though, it might be different. When we go out to like a year-long time frame, now all of a sudden, you get beyond the liquidity, because you're talking about a time frame that's multiple days or multiple weeks. Like let's say that my chart is a 1 week chart or a 1 month chart. And so I'm kind of wondering, maybe if you go up to these higher time frames, then maybe some of the things that we try and do, with trying to find signals on chart patterns and stuff like that might make sense. But I've never seen research to that effect. So shooting star pattern, if you look at each, you want me to show you? So you pointed out like a really specific one, so we can pick on it, right? Let me pull it up here. This is the great shit that you can do if you're Seth and you know how to program. Okay, so we are going to do the candlestick strat. Candlestick all. And, oh no, not candlestick all. Just candlestick strat. Okay. And then we select which pattern that we want to have. So we want shooting star. Okay. It's the S&P. So like, let's give it like a really big, you know, and give it the strength like 2, target 40. So we'll look for a really big, you know, range that we're going for here. Man, that really flipped around quickly, didn't it? I'm assuming that you would want to test that on the S&P 500, right? 5-minute bars. And then here's the key thing is that we need to go back to like 2018. Now we're at towards the end of 2023. So yeah, we can do 2018. That would be 5 years, right? Include commissions. Backtest. See, that didn't even take that long, did it? Okay, so what does it say? Shooting star pattern, not net profitable. Actually, this is there's something that you can see in the stats here that is a really interesting thing and can kind of mess you up in backtesting. So let me point this out. Short trades, they lost a lot of money. Long trades, they made a, considering that this is over 5 years, that's a pretty minuscule amount of money. But because the S&P 500 has a tendency to move up, that would make sense that you would make more money on your long trades than your short trades. So a lot of people will just come in and say, okay, so I'm just not going to trade it short. That doesn't mean that your strategy works. And when you go back through and you backtest it and you look at like the Sharpe ratio, your Sharpe ratio is still not going to be very good. Where do you find the backtester in NinjaTrader? You just go new strategy analyzer. And this strategy, this candlestick strat is one that I made. I think it may be in Discord, but I don't know. Maybe I didn't put it in because I have a neat little trick to allow me to do the shooting star that I don't necessarily want everybody to have. Anyways. Well, what we really want to do is we want to come back and look at this thing. Okay, so look, there are some periods. There are some periods where it seems like it works, right? There are some places, if you were only coming in and backtesting a month, then you would be like, shooting star pattern totally works, right? This is the problem with the retail trader, is that they say, okay, I'm going to put all these indicators and all of these different things on my screen, and I'm going to go and see what works. And you will probably see over the course of a week or over the course of a month, there's something that is kind of working, okay? But just because it's working this month doesn't mean that it's going to work next month. And when you take a bigger step back and you look at 5 years, the things that we can do with the help of computers, then you see that actually it's just noise. There's no efficacy to the pattern whatsoever. Yeah, shooting star doesn't work. But let me open it back up here real quick. So let's try this again. ZB is, yeah. So what I'm seeing right now in the treasuries, we definitely pushed back there pretty strong. I am not seeing a really strong, actually, I think that there might be central bank action going on here, because the flows in the treasuries are not actually that strong. I'm seeing the Japanese yen push back really, really hard. And I'm also seeing the yield curve steepen a little bit. So I don't know what to think of the yield curve steepening, but the yen coming up there, that makes me think that maybe the Japanese yen has come back into a, hey, this is really pressuring us and we think that it's just speculation, we're going to push back. So I would be very wary about trading against this flow. Let's just say. Yeah, no wonder 85% of retail traders lose money. Yeah, exactly. Because what they're trying to do is just like straight up never going to work. Once you have the ability to come in and backtest these things, so that like the stuff that you see so many retail traders start out by doing are just like insane. Right? The other thing is like once you understand the impact of meta orders, or just the once you understand the strong impact of orders whatsoever, like you realize patterns, like especially on a 1 minute basis, okay? Trading the pattern affects the pattern. And if enough people are doing it, or if you size up large enough, the pattern might just completely disappear or completely change its behavior. The video that I'm hoping to do this weekend, maybe I will read you guys the script. Would you guys enjoy that? Having me go through the script of the video that I'm going to make, and then maybe you can make some suggestions on how we approach it. I'm going to need to do some. Maybe I won't be able to do it this weekend. I need to. Francesco says very much. I think I need to make it funnier. I think that I might need to simplify some things. I'll go through this script for this other video that I'm making, because in this video I'm going to show you evidence. I wouldn't say that it's like proven, okay, but I'm going to show you evidence of a popular YouTube trend affecting the markets and affecting a strategy. But let's go through the thing that I wanted to look at here first, which is, so if I come into the candlestick strat, and I do the same thing, I put the strength. Strength is like how strong of a shooting star it actually needs to be. Okay, but instead of doing it on a 1 minute chart, let's do it on a 1 day chart. Right? And let's see if it will let us go back to 2013. I don't think it will let us go back quite that far. We're going to do ES. I think that you have to uncheck exit on session close. Okay, but we will still do something like, but instead of like 40 points, we're going to do like 100 points. Okay, so that's 400 ticks. Stop and target 400 ticks. Okay. Do only buys. Well, it'll show us the long trades and the short trades, so we could theoretically come in and say, okay, only take the longs. Sure. Make money when everyone is losing for the I really think that the title is just going to be debunking smart money concepts. Wow. So on a daily basis over that time period, it only caught 2 shooting stars. Oh, no, wait, because I didn't change the pattern correctly. Shooting star. Where is it? Shooting star. Okay, let's try that again. I'm certain there's been more shooting stars than that. Oh, okay. So in that time period, it only found 1? Wait, what if I just set the strength to be 1? There's just got to be more than that. What's that music? You guys have never played Final Fantasy? Come on. It's only like one of the most famous game musics ever. buy the dip and enjoy the sip. Well, so in this case, I don't think that you would get a better than the index, though. But only one trade is not enough for us to do any kind of analysis on, unfortunately. So that didn't really work very well, did it? I think that the problem with this one is that to do an analysis on a one-day chart, I'm gonna need data going back to like 1900 or something. Like I'm gonna need like 100 years worth of daily data or something, I think, in order for that to make sense. Oh well. Okay, so let me try and this is going to be this is going to take a while. Okay, so I'll read this script to you guys, and if you have thoughts or comments or what as I'm reading it, just put them out, right? And I guess I can address them halfway through, or we can like rewrite parts if we need to, because this is kind of like my rough draft. Okay. And I'll start out like, look, I'm so excited to show you guys this stuff because I think the data that I have to show you is just so cool, right? It's not just because I get to debunk a popular retail strategy. What I'm going to show you gets down to the fundamental nature of markets and trading. It's the most important thing any beginning trader can know, and it's what this channel has always been about. And it's this. Success in trading is not going to come to you through some guru, strategy, or indicator. Yes, there's lots of useful things you can learn about trading, and there's a lot of advanced and empirically backed information on my channel that can help you out. Ultimately, though, success will have to come from you and things that you discover. Markets are competitive, and you cannot build a long-term edge by following someone else. Now, Smart Money Concepts is the perfect test case for this because it has really become quite popular on YouTube, right? There is an entire cottage industry of creators pushing the concepts now, and I know that I'm not the only one that is sick of YouTube promoting this racket. And look, I know that means that there's probably going to be plenty of haters about this, upset about this video, okay? Smart Money Concepts is basically a cult led by narcissists, and the associated flying monkeys will always attack. But that doesn't matter, and I would employ my regular viewers to just ignore any such harassment from the Smart Money Concepts crowd that you see. All that matters is what the market actually does. If there is a tendency in markets that can make us money, we should be able to prove it using empirical data. Right? That's why today, I'll say to today's video, but since I'm talking to you about it right now, that's why the video will be focused on the data and what the data can teach us about markets. There's all this other stuff I could go into about how the founder of Smart Money Concepts was convicted for student loan fraud and the endless history of drama and lies from that community. I don't think I really need to get into that. I'm sure there's going to be plenty of recommended videos that YouTube will suggest to you if you want to go down that rabbit hole. But finish watching this video first, though, because that rabbit hole is like a really deep hole. One of the things that I always see the Smart Money Concepts people commenting on those videos is like, oh, well, maybe there's some problems with the creators and so forth in the space, but the strategy is still working for me. And so that's also why I want to really focus on the data here to show you that this strategy does not actually work. Yeah. Well, so that's funny. Sniper Scalper, I agree. You were one of the few that realizes what ICT is. He has never once shown a payout from a prop firm. He sim trades and delusional newbies believe him. However, I don't know. Fair value gap is a good but very old. So fair value gaps are like a real thing. I don't know why you would call it a fair value gap. Okay, but there is a reason why the market makes those. Sure. I wouldn't trade a pattern around it, but it's funny. But you notice I never mention ICT in my script. Okay, I'm trying very hard to allude to what's going on without singling out a creator. Because one, you don't want YouTube to have any reason to think that this is like bullying and harassment or anything like that, right? And two, I don't want to attract the ire of an individual person, because those people are crazy, man. Those people are crazy. Like, you know, the history with me and that is like, there was a person that would come into the stream that was like a really big supporter of them. In fact, I still see this guy like posting on all of the videos about smart when I was doing my research. So I think that this guy may actually be like paid by ICT, or like he's part of the racket, man. I'm telling you, if he's not an alt account of ICT himself. He tells me to look into it, so I look into it. I watch like one video. I'm like, no, this is BS. Okay. So then I'm like, walk away from it. Okay. Now, shortly after that happened, there was a spat with another creator named Vinny E-Mini, who came into our Discord and was trying to promote and was saying stupid, saying all of the things that are like the big red warning flags for us, that are like, yeah, it doesn't work that way. You are lying to people. So we banned him almost immediately, and he never forgot it. And he made a bunch of videos about me. That's like, because Seth, live trades. Seth live trades and has an affiliate link for Jigsaw. And that was like his complaint against me, which was like, it was just really crazy to have somebody like spend the whole week talking about you, and they have actually nothing. You've done nothing wrong. They have nothing to actually complain about, and yet they can still kind of do this thing to make it seem like you're a shady person. It's super, super crazy, right? Okay. Well, then I'm like trying to figure out what I do about this, because it's like, just, there's somebody lying about you out there on the internet, like big time lies, And then all of a sudden, this other thing pops up where like there's this guy calling Vinny and swearing at him a lot. Vinny's like walking around the stream with his shirt off. He's on his roof with a gun. All of these sorts of things, and he's claiming that ICT is like threatening him, or just like sending his goons after him. So basically, you've got like these two narcissists going at it. And basically, because of ICT, Vinny forgot about me, is I think what kind of happened. And I've kind of just like never really, in fact, it kind of makes me nervous telling you about it here on the stream, because then that's going to be like, they're going to come back and get mad at me, or what, come after me again. You got to love the YouTube drama, right? It's not fun for me. I'm sure it's fun for you guys as viewers. Okay. So I kind of ignored the ICT thing, but then since then, ICT's YouTube channel like just took off like crazy. Like, he has hundreds of thousands of subscribers now. It's really insane. And it's not just like he has, dude, Salim, I've been worried about you all week because there was that earthquake. And you hadn't been around as much, and you're going to school and everything. So I was like, well, it's probably okay. But I hadn't heard from you. I was really concerned. So I'm glad to see you here today. Is everything okay? Like, were you affected by the earthquake at all? I think maybe you're not in that area at this time, right? I don't think you're in Morocco right now, are you? Anyways, that whole thing was like, oh my gosh. Okay, anyways. So now Inner Circle Trader has there's other YouTube channels talking about him. Like dozens of YouTube channels, because YouTube has picked up on it as a trend and is sending people to the keyword. And I've kind of been sitting around making this video and waiting for when the sentiment turned on it. For when people start to go, you know what? This isn't actually working. Right. And then I started. So when I started to detect that, I went and I did the back test and everything. But the back test was super, super interesting. And I'll get into that in a second. I'm shook, but I'm not dead. Okay. Good deal. Okay, so with all that, should I get back into what we're doing right now is I'm reading you guys the script for the video that I'm making, so that we can make some changes. So you can nitpick if there's things that you think I should change or whatever. Totally can get into that. You need to sound more aggressive. Okay. Now, before I show the backtest results, let's get a little into the theory behind smart money concepts, okay? Smart money concepts contends that market makers are manipulative entities that are able to manipulate prices to screw you over. The claim is that moves are calculated ahead of time to fool retail traders, and if you understand their algorithm, you too can take advantage. Okay, this usually centers around what smart money concepts calls a liquidity grab. The market maker can push price through a major support or resistance area and use the resulting stop volume to position themselves the other way. Now, there is one setup based on this concept that has become particularly popular on YouTube called the silver bullets. That sounds like an obvious red flag to me. Like, you might as well call it snake oil at that point. That's what they call it. It's the silver bullet, right? Now, the nice thing about the silver bullet is that it is a very well-defined setup. Usually, gurus don't define their setups very well because otherwise their followers would just backtest it and find that it doesn't work. Boy, that's the thing about the smart money concepts community that just like drove me over the edge enough that I was compelled to program the strategy and try it out. They think that backtesting is just going back through a chart by hand. This is not backtesting, guys. That is just a waste of time. Humans are not objective and consistent enough to perform a valid backtest. Not to mention that you need multiple years and thousands of trades to get a statistically significant result that accounts for fat tails. So any backtest that can be performed by hand won't give you enough data points, right? Of course, I don't have that problem because I'm a programmer. That means that I can run a backtest that is both objective and is over a large enough sample to give us usable empirical data. It's an important word, empirical. You notice I use it a lot. Empirical means that the result is based on observable data that others can verify. The strategy that I wrote in NinjaTrader 8 will be available for download from my Discord and is linked in the video description. Everyone can download the code, run it themselves, and verify the results. So, the specific setup goes like this, okay? Manipulators will push price across a key level such as a previous low as part of a liquidity grab. Price will then return to above the structure from before the push, okay? In normal trader speak, that's the swing high from just before the down move, okay? On that move back up, they're looking for a fair value gap, okay? Don't think too hard about the name fair. It has nothing to do with value. They're just picking words that sound truthy, okay? But basically, it is a place where price moved through that area fairly quickly. But we will define it algorithmically here in a moment, all right? The idea is to buy when price returns back to that fair value gap, and if the trade works, you will see a higher low and price will reverse, okay? Of course, there's a couple of problems with this idea, okay? If there's a pattern, wouldn't other market participants modify their behavior and ruin the pattern? They also never talk about the mechanics of how a manipulator can move price. It's true that a market maker, that a market participant can move price up through their buying, but that also means that their profit taking will move price down. And as we discuss in my proven market behaviors video, that selling is likely to have a stronger impact because of the damaged liquidity behind the move, meaning the exit will move markets more and result in a net loss. Which doesn't mean that it can't work, but it's a super risky trade. If the manipulator doesn't get enough volume out of the break, they will be stuck with inventory they'll later have to puke. Not to mention that the majority of the volume out there is not retail volume, okay? There are other large players out there that could take advantage and just screw the whole thing up. But how does it actually perform? Well, we got to program it first. So let me pull that up here. The script is good until now. Well, see, once I get into how do we actually program it, it's kind of like, you know, I feel like you're really getting into the weeds, and I'm worried that people will lose engagement at that point, but I don't know any other way to do it. Okay. So here's the code that we got, okay? So each of the conditions are pretty easy to find, and we can use them as checkpoints. And once all of the checkpoints have been met, we submit an order. So here are the checkpoints, right? And when they're all true, then we submit an order. All right. For the breach of a key level, we will use the breach of a previous day's high or low. Then we can use NinjaTrader's zigzag indicator to determine what the swing high/low was from before the break. Now we got to be careful with the zigzag because that indicator will redraw the last pivot. However, we're looking for the pivot from before the break instead of the latest pivot. In other words, in this zigzag, we're looking for 1 and not 0. As long as we're not looking at the latest pivot that will be redrawn, we shouldn't have any issues. Okay. Next, we need to look for a fair value gap. Oh yeah, and I need to pull that up for you guys here as well. Okay, so for a gap down, we want to look at the difference from the low of 2 bars ago to the high of the current bar to determine if the bar in between those is a match. If that gap is higher than the threshold, which we can define, then we found a fair value gap. And I will draw a picture here for you that, you know, I'll be showing on the screen. But basically, you have a bar like this. You have a bar like this. And you have a bar like this. Okay. So if the low of the bar 2 bars back and the high of the last bar, and the difference between those is more than a certain amount, then you found a fair value gap, okay? So that this bar in between is a fair value gap. Make sense? Yeah, well, I'll show you a chart here in a bit. Don't get ahead of the class, NJ. Okay, wait. Okay, I put this part into its own indicator that will be included in the zip file you import into NinjaTrader. You can add it to a chart and we'll draw rectangles around those gaps. Actually, you want me to show you that? I can show you that chart. ES. I'll just do a 1 minute. And then indicators. Fair value gap. You can define the gap. In this case, I'm saying it needs to be 4 ticks. And when we zoom in here, we can see some situations where we do get these fair value gaps. It's going to tend to be on like a big bar like that one right there. I don't know if you can see that clearly enough, but like right there, fair value gap. Okay. I would consider adding a question on what liquidity. Yeah. So the part that I haven't written is I think will be at the end, which is going to be, okay, what is the market actually? But we can kind of wing it here when we get to that point. Okay. So now the interesting part, how does it perform? Do you have any questions about all this? I will close this. Okay. New market analyzer. No, not market analyzer. New strategy analyzer. Okay. Pulling it up here. Just give it a second. Let's change a few things here. Take the log off so you can see it a little bit better. Also, this last time I ran it was actually in March. I'll show you what it looks like right now. There you go. Okay, that's correct. Let's change it now to the end date to be today. And the instrument to be the latest expiry. Okay. See, Jiwi, he knows what it is. So it'd be interesting to see. I haven't really checked it since the summer, so we'll see what it did over the summer. Yeah. Oh, it's even worse. Okay. So this is where it gets interesting, okay? At first glance, one might think it appears to work, okay? It has a terrible Sharpe ratio of 0.06, but it did make a little bit of money, right? Okay, but look at the net profit, the cumulative net profit graphed over time. For most of the backtest period, the strategy performs randomly. That is until a period just around the pandemic where it starts working well, followed by the most recent period where it gives basically all of those gains up. In other words, it worked for a while and then it suddenly stopped working. Okay, but it gets even more interesting. And for this one, I have a little screenshot somewhere. Let me see if I can find this. I don't want to have to pull it up on the web again. Oh, I don't actually know where I put it. Did I already move it into the archive? I thought I made one that was SMC. Maybe not. Did I put it in my pictures? Oh, here it is right here. Okay, let me backtrack a little bit, okay? So, for most of the backtest period, the strategy performs randomly. That is, until a period around the pandemic where it starts working well, followed by the most recent period where it gives up almost all of those gains. In other words, it worked for a while, and then it suddenly stopped working. But what's more interesting is that these changes in performance coincide with the popularity of the trend on YouTube. So here is the Social Blade stats of a popular Smart Money Concepts channel, and you can see that right when that channel took off, almost to the day, is when the strategy started to perform dismally. You see it? This is where y'all go, ooh, ah, like, look, okay. January 2022. That's right there. And ever after that, starts doing poorly. You see this. You see this, right? Okay, listen. Correlation Does not prove causation. Okay. But it's really, really odd. Okay. But the thing is that like, that's exactly what we would expect. Okay. So yes, I am saying that YouTube influencers could be having an impact on intraday market movement. And that might seem crazy at first, but you have to remember that one, orders have strong impact on price, and two, these channels have hundreds of thousands of subscribers, okay? That can add up to millions of dollars that will easily move the market on a short-term basis. Note the strategy performs randomly through most of the data set until the trends first started on YouTube, which suggests that it's the popularity of the strategy itself that creates initial success. Okay, a strategy being a little bit popular helps the strategy. In the end, though, that's just the market plumping you up. Eventually, the strategy gets too big and starts to fail. Okay, this is the whole problem with patterns and why all of the data suggests that technical analysis, and yes, even the price action form of technical analysis, isn't effective. Trading the strategy changes the performance of the strategy. If you size up too much or the strategy becomes too popular, it turns into a losing trade. So everyone wants to outsmart the crowd by just watching what the crowd will do. That ends up just making you a part of the crowd. The way you outsmart this crowd is by not caring what the crowd is doing. Now, I have to admit, this is like, so that's what I have written so far. I do have to account for, okay, this is one instance that we have. Based on our understanding of markets, what we're seeing is exactly what we should expect to see happen. Is a strategy becomes a little bit popular on YouTube, it starts to do well, it gets too popular, it just starts losing every time. That's what we expect to see, because trading the strategy changes the strategy, and the market comes after it because the market is competitive, right? I would love, and I think that something that a clever hedge fund could start doing is tracking the popularity of strategies on YouTube and starting to trade against them when they get too popular. Seems like a good strategy to do. Okay, I'm not quite sure how I want to address that part, okay? But what actually happens? What does the market actually do? What is a more accurate model of markets based on the empirical data that we have? Okay, well, orders have a strong impact on prices. And as a result, it is actually quite easy to move prices on a short-term basis. Now, the problem is that there are these big institutions out there that have to buy and sell a ton, way more than the available liquidity out there. And so when they buy or sell, it's going to move prices and not in their favor. If they want to buy, they're not going to get as good of a price as they wanted because their buying is going to move it up. So their whole game is they need to come in and buy it. They need to do it in a way that gets the best prices for them. Now, one of the biggest innovations that they've found over the past 2 decades is that limiting, spreading your trades out to limit your impact on the book helps you out more than anything else. So what you will tend to see happen is I'm going to start closing some of these windows. So you will see a little move up as they buy, but then they're going to back off, let the liquidity recover, and then start their next leg. So if there's any pattern that you can look at that will be consistent in the market, it is the bull flag. You can't necessarily trade the bull flag saying, okay, I see a flag, so I need to go long. Okay. You can only do that if you know that such an order is out there. Okay. But when a large meta order is being executed like that, that's going over the whole day, you're going to tend to see this pattern. Okay. It's not a predictive pattern, but it is a pattern that you will see. Okay. Now, here's the thing, is that this guy that needs to buy or sell a lot, basically, anything that he can do, if he's buying, anything that he can do to get people to sell to him is going to help him get a better price. And yes, he can potentially manipulate prices. So what he can do is he can buy a little bit, back off, let price come back down, pull his bids, let price, fall back through, and doing that kind of create whatever chart pattern he wants. And so if there's a certain chart pattern that makes retail traders think, this is an opportunity for me to sell, he's going to go make that pattern appear to happen, wait for everybody to sell into him, because now he's getting more orders filled. So it doesn't matter what the pattern is that you think you're seeing, he can always adjust to it, right? He knows what's popular right now, and more importantly, he knows what orders have come through. So it's like, if this one thing didn't work, then he'll just try another thing until he gets the number of orders that he needs. So you can't beat that game. The only way that you can win that game is if you know that the large meta order is out there and that the overall pressure is going to be buy. Because any pattern that you're going to look for, they're going to do every kind of little thing to screw you up and make you want to sell it. Right? So that is a correct understanding of the markets. Patterns don't work. At least not on short time frames. So that's the part that I need to write. And I need to make it, I think I need to do a better job of making it like, okay, I totally get it now. For somebody that's watching Smart Money Concepts, is not drawn in by the social part of it, because it really is like freaking cult. Okay, but somebody that's willing to look at empirical evidence and everything, you're going to go through that and it's going to be like the revelation. Now I see. I just need to know whether they're buying or selling that day, because every pattern is just going to work against me. So that's basically the video. Okay, Indie Scalper asks a good question. So does that mean you wouldn't care whether a large order gets pulled? The fact that it simply showed up would alert you to some manipulation in progress? Potentially, yes. Yeah. So if I am not in a position and then all of a sudden I start to see manipulation like that, really big bids and offers showing up and then disappearing really close, like on the inside bid and offer, I will avoid that location completely. I will avoid that location completely. And in fact, if I have a position on, and I'm winning, and then, we get up to the highs and I started seeing that at 14, that actually might be a good reason for me to just exit a position, because somebody's doing something. I don't know if it's long or short. I don't want to, if it's a meta order short, I don't want to lose all of my profits. Basically, that becomes an area of like a greater uncertainty. If not something that like attracts price. That's another thing, is like if you get a collision, a big trade happens, the latent liquidity is less there and price would get stuck there. So like when I see really big, like if I see really big market orders come through, all of a sudden 5K came through, I think your natural inclination would be that's a really aggressive buy order. I want to buy because it's going to continue going up. But what almost always happens to some degree is that price will kind of get stuck there for a little bit. And yes, the bigger thing is that I need to have some sort of a bias for the day. I need to have something that tells me they need to sell a lot. And overall net for the day, it's going to be sell. And then I just got to use the liquidity to find the best spot for it. Going to quote Batman, save one. Yeah, like you don't want to trade. Like the whole thing is, if there's a large meta order out there, you don't want to trade against the meta order. You're gonna lose. If you don't know what direction the meta order is coming, but you think that there's one out there, but you don't know what direction it is, stay out. So the thing that I think is so great about the order flow view of markets, because ultimately it is what you would call a theory. It's a theory with a large amount of empirical evidence, okay? But this kind of look of, okay, what are flows? What are things that could potentially cause people to be submitting orders today? And let's add all of those things together, okay? Is that you actually get a workable framework that can explain everything. And, you know, because if you're trading pattern, right? And you trade the pattern and then it doesn't work that time. And it's like, well, why didn't it work that time? Nobody knows. It's just random. It only works X% of the time. You know? Whereas in the order flow view of markets, we can always explain what's going on. Well, it's the interaction between the orders. How do you generate your bias for the day? Okay, so let me just list a couple of things that I look at, okay? One thing is the seasonality. So in the next month or two, you're going to find that I'm a little bit biased towards taking the treasuries long and equity short, because this is a time of year where seasonally it tends to be risk off. Okay. Another thing that you will find is that I am much more likely to take a trade on a Wednesday or a Thursday than I am on a Monday, because there's not as much activity on Mondays as there are on Wednesdays and Thursdays. So this is seasonality. And why does that happen? Well, because you come in and you call your client and you say, hey, let's do this trade. I have an idea for you, and here's what we'll do, and here's how we'll execute it, and all of those things, right? You call them up on Monday and you say that, right? They're going to say, okay, yeah, let's do it. Let's, and then you get a day to plan it, and then you do it on another day. So it ends up actually being Wednesday when you do it. And Monday is when they're all coordinating all those things, and so nothing happens on Monday. Monday tends to be quieter, and almost every metric that you can go in and look at, like how much trend is there in the day, what is the average range of a day, and you look at it by day of the week, you will find that there's more volatility on Wednesdays than there are on Mondays. But it is a fat tail with it on Monday, which is to say that if you do get volatility on Monday, those are like the biggest trend days. Okay. So that's one thing. Another thing is going to just be changes in expectations about fundamentals or future flows. So if there was a piece of news that significantly changed their view of the markets. So the one that we have right now is that the equity market was pricing in that the Federal Reserve is going to reduce rates 4 times next year. And now the Federal Reserve is saying, no, we're not. We're only going to do it 2 times next year. Okay. But then there's another competing story right now that says that GDP is going to get revised down. So that's going to change the Federal Reserve's view of things. And then on top of that, we've got like student loans coming, which is going to reduce GDP by 0.5 percentage point. There's possible UAW strikes. That's possibly going to reduce things by like 0.2%. There's likely going to be a shutdown next week, so every week that goes on, that's like another 10th off of GDP. Okay, so that's where I'm again, like that coincides with what the seasonality is. So that was why, like yesterday, the flow was like all sell. Today it was like, well, maybe the selling can continue, but they had already sold so much. So now I'm kind of looking at, does this actually reverse and move up? right? Another thing that we'll look at, and this is the last one that I'll talk about, although there are many, but another thing that you can look at is current options positioning, because these options market makers have to hedge against gamma, which is to say that the more that a stock moves, the more that the price of the option moves relative to the underlying. And so as the stock moves up, they're going to have to like buy more of the stock for them to be properly hedged. And that can kind of continue to, there's certain points at which, you know, if the market gets below a certain price, then these guys have to start hedging, and it pushes the market further. Okay. I ask because every setup has a unique signature. Nothing's ever the same. So basically, but it's not pattern. So I'm trying to tell you, don't look for a pattern in price. The patterns in price are just noise. They change. They work against you. What you want to look for is combine all of the information that I have together. Are there going to be a big imbalance between the people that need to buy today and the people that need to sell today? Yeah, so you don't use the charts to generate a bias. Largely, no. Yeah, I'm using information that comes from outside of the market. Right now, I know. Okay, what? Now that doesn't mean that I don't look at charts, right? Because the charts kind of help me verify if I'm correct, right? If I'm correct, so if I thought that there was going to be an imbalance today, and I'm correct, then what should I see? Well, I should see this, right? Obviously, we're not getting that today. So if that was my bias, I would be saying, okay, it looks like my bias is wrong, and hopefully I didn't take a trade. Hopefully I realized that wasn't happening before I took a trade. Right. So I use that to check myself. And keep track of the flows, because anytime that there's a big move, I'm going to be like, okay, what caused that to happen? You know, there was a big move yesterday, and in Treasuries, interest rates rose a ton. Why is that? Well, because of the Federal Reserve meeting that they said that there's going to be 2 rate easing rather than 4. Right now, the other side of it is the execution part of it, okay? And that's where we're trying to use the order flow. So one is I'm watching what I'm seeing on the DOM for signs that there's that large meta order out there, right? And then I can do things like I can look for icebergs. I can look for places where I can catch the edge, which is to say, like if I want to buy, there's only a few hundred contracts on bid. So on offer. So if I buy it, I can buy it just as it ticks up, and then worst case scenario, I can hit out, I can scratch the trade and hit out at break even, right? And by watching what the liquidity is doing and so forth, I can kind of see the better places to get in. So if there's a liquidity hole, I want to kind of, and I'm buying, I want to buy below that liquidity hole if I can. But I don't want to get in as I see the liquidity hole forming. If the liquidity hole has formed, I want to wait 45 minutes for that hole to heal before I go in for maybe there's another leg. Okay. Now, if you go to speculatorset.com/strategy.html and you put your email in there, it will email you a PDF that goes into all of this a little bit more in detail and explains how you can use the stylized behaviors of markets to your advantage in execution. But just realize that whether I decide to buy or sell is almost never just based on what I'm looking at in the DOM. Because again, they can kind of change what they're doing to make it. If you look at this and say there's a large meta order to buy, you'll be able to convince yourself in the flows that maybe it's there. And vice versa the other way, right? So that's why you really have to come in and say, like, here's my bias, and then here's exactly what it is that I'm supposed to see. And then if I'm not seeing that, then I'm not taking a trade. Because if you just come in and say, I'm just going to wait and see what the market tells me it's going to do, you'll talk yourself into a trade. You know, some big order will show up. You'll be convinced that they're going to do something, and the order flow has to be analyzed within the correct context. And yeah, if your analysis of the flows is wrong, I mean, this is the big risk with my style of trading is you go through and you develop your bias for the day and you say there's going to be a large meta order that's going to buy, and then that's wrong, then you're going to lose, right? So you need that analysis of the flows to be really good. That's why I'm a sniper. I only do it when I'm really confident that I know the flows are going to be a certain direction. Which, as of late, has turned into most days I don't trade. So let me try and scroll back here. This right, yeah, I'll use the regular mic when I record it, not instead of the dynamic mic, because that gives you better dynamic range. That sounds better. Oh, sorry, I didn't see this one from Trade with Tyler. New to the DOM, are limit orders or market orders more influential to you as you're entering a trade? Okay, so I pay more attention to the market orders. Basically, if I'm going to get into a trade, I am looking for a persistent imbalance in the market orders. I mean, the limit orders matter too, but what I would ideally want to see is there are more market buys than there are market sells. On average, the limit buys are stacking, and on average, the limit sells are pulling. And I pay a lot of attention to when it ticks up or down, how many contracts did it take, right? So like every time that it ticks down at 11, and it takes like 2,000 contracts to trade, but then every time it ticks up at 11.5 or 12, it's only like 200 contracts, right? That's a pretty persistent, that's a pretty big imbalance. Like that's probably going to result in a trend to the upside. But the market orders are the best indication we have of the presence of informed trading. So when I say, you know, I have this bias and I'm looking for something specific, what I'm looking for specifically is evidence that there's a persistent imbalance in the market orders. You know, sometimes I might make a trade on there's going to be a correlation. The S&P 500 or the Japanese yen is going to move down, and that's going to push the treasuries down or something like that. But by the way, I should note that the 30-year is getting absolutely destroyed here. Like in the 10-year, it's kind of like, okay, we've just kind of been hanging around this area for a while now anyways. In the 30-year, they've just taken new lows by like 8 ticks. So, whew. Yeah, there you go. Octavius strip, bent the knee, and ZB, yeah. So, yeah. A large meta order, if there's a large meta order in the market, I'm going to see autocorrelation and persistent trend in cumulative delta. Okay. So like if I come over to this chart this morning in the 10-year, I mean, look at that. It's just, it sticks out like a sore thumb, right? It's almost like a straight line. Ooh, I can't draw a straight line apparently. Look at how clean it is. very auto-correlated trend to the downside, them persistently selling, and price reacting accordingly. Now, you'll notice, by the way, price is way more random, right? You get these really big pullbacks and everything, but then when you come down and you look at the cumulative delta, you can see that it's just they're consistently selling, right? So it kind of helps you from being faked out by what the price does. You can see what the orders are actually doing. That is a meta order. There's nothing that I've ever found that says, you see this pattern, and then you'll get this, okay? But if there is a meta order out there, you will see that. There's nothing in the chart that can help me predict this, but there is information out there that can help me predict this. And if I'm correct, that's what I'll see. So this is kind of a check. I suppose it can also be a risk management sort of a thing, because if I came in right here, so the way that I would try and trade this, if I thought that, well, I did think that we were going to sell today, right? But we had sold too much in the overnight. But if I was trading the overnight and I'm seeing this, right? Okay, we move down. I'm seeing persistent trend, probably somewhere around here. So somewhere around 6 o'clock. Yeah, somewhere in here. I'm going to go short. Right? Now, if I had seen cumulative delta do this, then I would have gotten out, right? Because that's not the persistent downtrend. So to some extent, I guess I am using technical analysis a little bit as a little bit of a risk management thing. But it's only useful in as much as I believe that something is going to happen, right? Like, it's not like I come in and there's like X different patterns that I look for, and then when I see those patterns, I trade accordingly. No, it's I have a prediction. I can draw out to you almost exactly how I think the chart is going to go. And if it doesn't look like that, I don't take a trade. Right? It's a very, very different approach. I hope that makes sense if you're new. Because I'm saying something a little bit new that, I'm not sure how people respond to that. I'm not very good at understanding how other people will think or view something, or what other people know to know if what I'm going to say is going to make sense to them at all. But so if it doesn't make sense, you just tell me. I kind of feel like there was a lot of chat when I was going through my script, but I didn't see as much like objectively like, oh, I didn't like this, or this didn't make sense, or I think that there's a flaw in this. It was just like, you were just really interesting to watch it, to hear about it, which is good. I guess it means that I've got a good video going. I think it needs some more work. Hopefully in the next 2 days, I can work enough on it, because I'm really concerned about like engagement, and like it needs to be funny, those sorts of things. Octavia says we might have a mega Godzilla order by the end of the day. Yeah, like the issue that I'm dealing with right now is that at the moment, I don't really see any reason for them to be doing one particular thing or the other. But on the larger time frame, I think that the treasuries are probably going to continue to sell. So it's kind of like I've got to look out for like the perfect opportunity where the buyers just like way overdo themselves for me to try and get short. And I'm not so sure that it's going to happen today or tomorrow. It might be that I need to wait until Monday or Tuesday and try and go short treasuries. But I think the other thing, though, is like this research report where they're saying like GDP is about to get revised. Here are these things that are happening right now that are going to affect GDP. That is probably putting the kibosh on it. If it wasn't for that, we'd almost certainly be at 4.5 already. But we've already moved like 20 basis points in the past day. Like, that's a lot, right? So that means I've got to be really careful about how I try and trade it, right? Yeah, because the script was very nice. Thank you. Part of it, the thing that about this particular script that I think is good is you can tell I'm passionate about it. Like, it is easy for me to read that script and be passionate about it. I don't have to fake it. The word, as I'm reading it, the way that I say it, just the emotions just say this is the way that you got to do it. Because this is the thing that the whole channel has been about from the very beginning, is you've got to understand the impact of orders, because that impact of orders basically kills all of your little patterns that you're looking for. So you cannot go out and find some strategy that's popular on the internet and expect to be successful with it. Market is competitive. To find an edge, you have to discover something. You have to know something that everybody else doesn't know. You have to have some ability that not everybody else has. And if all you're doing is just copying the same pattern that like everybody else on Reddit is using, you're not going to be successful with that. And it's so difficult. It's so very frustrating to try and explain that to people in a way that is convincing, because it is the exact opposite of the way that most people think. The way that most people think is, what are people around me doing? Right? I tell you, I was thinking about this a lot. That's in the shower. That's why I was a little bit late today. It seems to me, if there was what would be something, personality trait, something about a person that would make me think probably this person wouldn't be a good trader. I think that if you were like the popular kid in school, you didn't do very well in school, but you were super popular, trading is not for you. Right? You should sell. Let me tell you something. This is the one that really gets to me, okay? Because I know my place in the world and I know what I'm good at and what I'm not good at, okay? Selling is more powerful than trading. Selling is objectively in almost every way more powerful than trading. Think about it. Because trading is basically trying to predict what other people will do. Trying to, it's not, it's what will other people buy or sell based on this piece of information. Okay. Selling is inducing other people to buy or sell something. So selling will always be more powerful than trading will be. Always. Okay. These people that become like multi-billionaires, I'm not going to use that example, but you go and you IPO. If you're starting a company and you IPO, what you're actually doing is you're selling, right? You're going out and you're convincing people to buy your company. You're inducing them to buy. And because you're the one that's causing other people to buy or sell, that's more powerful than trading. So if you were the popular kid in school, you're going to be good at selling. You will make more money. You can make more money from selling than you can from being a trader. But if you want to trade and you were the popular kid in school, you realize that one of the things that you're going to do is you're going to care a lot about what other people are thinking, and their opinion of things is going to color your own way of thinking and screw you up because they could be wrong. You need to have that tendency to be against the crowd, to not care what they're thinking and do your own work if you're going to be a trader. Trading is not following. That's the key. That's the key realization. Trading is not following. Because all retail traders think that that's what trading is. See a pattern, you're just following what other people are doing. Don't do it that way. If you want to have any chance of success, you have to realize that it's not about following. And that's why I put so much emphasis here on the channel. Like, don't shadow my trades. Don't, here's the information. You need to be able to do your own analysis. You need to be able to go out and find your own edges, things that will predict orders and things like that, and not just rely on what I'm using or for me to tell you what those biases are. Because I don't want you to follow me. I want you to collaborate with me is what I want. Right? But don't follow. Trading's not following. A technical question for those who might be more used to traveling by plane. It's been 8 days since I got off the airplane and my left ear still hasn't popped. Okay, so if so first of all, that would not necessarily cause damage to you, okay? But if it hasn't popped and you can feel the pressure, then it probably what it means is that you've got too much gunk up in there for the air pressure to equalize the way that it should. Okay. So Tariq is kind of on the right track. You need to do something to get your sinuses to drain, essentially. So first thing is I would say is you need to drink a lot of water. You're probably not drinking enough water. Drink more water. That'll get the fluids moving, and that might help the relieve the pressure. Or maybe you have an allergy or something. You need to use allergy pills or something like that. But that's only if you're just objectively feeling the pressure. Because something that will happen to you a lot is that pressure will just really slowly equalize on its own and you don't notice it. And as long as you're not feeling like that pressure and that pain in your ears, it's probably not a big deal. And this is just coming from somebody that his wife is a flight attendant and flies a reasonable amount. I really, I need to make a business somehow out of my flight benefits. I'm told that traveling services is like a valuable thing. Somebody that's willing to fly anywhere in the country to provide this service can be like make them even that much more valuable. But I don't know what it is that I can do that I can be flying around the country to do for people that, it seems like that the ability to basically fly anywhere in the country for free is like a really super valuable thing that I should be making money from. And I just can't figure out how to actually make money from it. It just seems so stupid to me. You could smuggle. No, I'm not going to do something illegal. You could certainly be a personal courier. Maybe I could do that. Especially if I could set it up so that, like, because my wife is a flight attendant, she could be an air marshal. So then there would be like she could be the protection, and maybe that would work. I tell you what, that just gets me on this whole other tangent. If you have questions about the market, put them in now because I'm about to go off on a tangent, okay? And I don't want to get too deep into the tangent and then have to come back to that, okay? So I'm going to start the tangent, but you start typing, you beat me, okay? I did a search because I wanted to know, why is it that some pistols are like $300 and some are like $2,000? What is the difference in quality in a firearm between $300 and $2,000? so I did that, and I watched a couple of videos about it, and it was kind of interesting. It kind of seems to me that firearms is one of those places where the what is the word? The value that you're getting out for paying more diminishes very quickly, essentially. Like, yeah, there is a big difference in quality between those, but like somebody that's just starting out, they're not going to notice. They're kind of not going to know. These are all going to be things that like enthusiasts care about, but only just because they care about like things being done well and everything. But like in terms of actual performance, it doesn't actually make that big of a difference. That was my understanding of it. Okay. So I do that. Now all that YouTube wants to show me is stuff about firearms. It's like, okay, it was interesting. I really liked learning about what are the key brands and, you know, based on price point and utility and stuff, which guns are popular for what things and everything. But I don't want to spend my whole day learning about firearms. But you see, that's the way that the algorithm works, right? Is if you happen, I'm on a list now, maybe, because the thing is I don't know if I actually want to get anything. I was researching because I thought maybe I would get my wife one, because something that happened to her when she got divorced was that basically, even though the guns were given as gifts to her, he somehow ended up getting them in the divorce, which was not correct. They didn't consider them as gifts to her. They were considered as joint property, and so he got to have them. So I want to go and get her a gun that like has her name literally engraved on it, and everything is like so clear that it is hers. That's what I want to do. But like, I have little kids. I have a teenager that's, you know, been a little bit depressed, and I've been concerned about them committing suicide before. And even though I have a safe and everything, I'm kind of like, you know, I don't really need to do it. I don't see myself going out every weekend and shooting. So maybe now is not really the time to go and buy a firearm. So right now, I'm kind of leaning towards not doing it. You know? You're American, weren't you born with this knowledge? Right? But you know, this is the way that an ADHD person works. This is absolutely an ADHD person, okay? Because doing research to buy something really can give you that dopamine high. So like what I will do when I'm kind of feeling like I'm not getting the motivation and I need to pull myself out of a funk, is I will just randomly select something and say, okay, I am going to do all of the research in the market to determine what would be the best product for my need in this space, but then not actually buy anything. Because this is what ADHD people will do, is they'll say, I've got a new hobby. This is my hyper-focus. They spend all their time learning about the hobby, especially researching products, and you buy a bunch of products, and then once you've bought them, you get the dopamine high from it, and then you never actually do the hobby. Right? And so I've seen people do that, and I just kind of, you know, figured out very early how to short circuit that. Just never buy the thing. Jiwi says he does that too. It's fun. And you know, like the cool thing about this is that then you know all of these cool things about a bunch of different stuff. And when you do have money and time and you're looking for something to do, you have like 20 different things that you could pick up as a hobby that would be interesting. And you know which one is actually the most interesting to you at that point, right? Thick book. It definitely got thick up here. I don't know if that actually means anything. But what I will say is that from the lows, we're about 40K contracts net long. So what I'm seeing right now is evidence of a meta order long, except for that the actual price movement is a lot choppier, more choppy than I would expect. So I don't know if I actually want to try and trade this one. But if I had to make a bet, I would bet that they're going to extend a little bit above 16. Octavius says delta hedging is 16. Yeah, well, the big thing, yeah, actually, this is a good point. You know, I think that the real trade here is the yield curve is steepening like insane. Like if I come back here, look at how much the yield curve is steepened in one day. That is like one of the biggest changes in the yield curve that we've seen this whole year. That's a big shift. And so that might be why our individual instruments look a little bit crazy. Like when I look at the 10-year, it looks a little bit iffy. But when I look at the 5-year, and if I was taking a trade in the 5-year, it'd be great, right? And so probably the trade for me would be to come and go short the 2-year. But it's too late now for me to try and take that trade. I only got 40 minutes left. I got into nuclear physics. Oh, dude, I love that that series. I'm gonna go watch that again. That was just so interesting. My father-in-law was a nuclear safety engineer, so whenever they come around, I try and talk to them about what it's like to work at a nuclear power plant. Well, my father-in-law was a nuclear safety engineer, and my brother-in-law is a nuclear engineer. So when they come over, I try and get them talking about that, and then just listen to them. This is just... Where do you have the 10-year delta? What do you mean by that? A good technical analysis pattern would be trading above a certain... Well, okay, so the one that I back tested, and the issue is that the retail data on this is not really very good, so I don't 100% trust the back test result. But and I can only go back a year. That's another problem. I can only go back a year, but we have really solid theory behind it. The results are about what we would expect. Okay, is this? There's an indicator in NinjaTrader called R squared. And R squared is basically a measure of autocorrelation. So if over the time period that you know, like you can say 10 bars or whatever the deal is, if over the period of 10 bars, your chart looks like this, then you're going to get 1. And if your chart looks like this over the 10 bars, then you're going to get this, and that's going to be 0. Okay? So if you're getting autocorrelation above 0.7 or 0.8, okay, autocorrelation in price, and 0.7 or 0.8 autocorrelation in cumulative delta, then you take it. That was the strategy that I back tested, and I might have done it with, like, also tried waiting for a pullback. But anyways, the back test looked really good. It was one of the best back tests I had done. Yeah, you gotta use Hursta Exponent. So I think I have that one, and I was not like too impressed with what it has. Let me see. Oh, I could do it over here like this. Indicators. I think I have an indicator that was Hurst Exponent. E, F, G, H. No. Maybe not. Well, rather, I can't find it. Maybe it's called something else. Like it might be that CADF one. Because my recollection was that, like, calculating what the Hurst exponent of a thing is not quite such a simple thing. And that you can only kind of, like, approximate it. You'd have to combine it with the actual trend following a mean reversion strategy, yeah. I mean, the thing, I spent a lot of time researching about fractals and everything, and the conclusion that I love to do this. Let me show you this, okay? So let me explain fractals to you, okay? So if I come in, I bring my OBS over here, then you can see my screen and you get this crazy mirror effect, okay? So this is a fractal because the input of the previous run of the function is, or the output, the output of the previous run of the function is the input into the next iteration. And then that just goes over, and that's what a fractal function is. So you take the output and then you put it back into the input, okay? Now, if I come in and I look for the magnifier here, and I really zoom in on this thing. Where is it? Come on. I forget how to make the magnifier work. It's so funny. This is probably gonna like do all sorts of weird funky stuff too. Ah, there it is. Okay. So now I have the magnifier. I need to make it smaller. Okay. Oh my gosh. Okay. So now I can zoom in on this inside bit, right? And as I zoom in, you'll notice that it doesn't look right. Yeah? Like, it just starts to get weird. And you can even see, do you see how, like, as I move my mouse up there a little bit, like this little white spot starts to show? Like, sometimes my cursor just doesn't even look like a cursor anymore. It gets distorted and stuff like that, right? These are the sorts of artifacts that fractals cause. So, like, I can't predict, without actually doing it, I can't predict what my mouse is going to look like and how it's going to affect these things until I've done it, essentially, right? That's the way that a fractal works. That's the whole thing about fractals, is that we just don't know. There you go. Now I'm getting it to do wild stuff, right? We can't predict it. Nobody's found a method to say, what will the 100th iteration of this fractal be, without going through all 99 other iterations of it first. To just like straight in constant time calculate the 100th iteration, nobody's found that. Maybe it exists, but nobody's found that, right? Okay. But one thing I can tell you is like right now, you know, well, what I'm seeing is based off of what was on my screen. I can see the blue, which is like in the screen behind me. So the most important thing that determines what a fractal function is going to end up being is the initial input, right? So I can look at the initial input and maybe predict some things about it, but then beyond that, I can't really actually predict what's going to happen. So that's why I kind of eventually stopped looking at the fractal stuff, because I kind of realized that like it's a crapshoot. You can't actually predict what the fractal is going to do, so it doesn't help you. her stat exponent and everything is really interesting because the market does tend to follow a fractal and everything. But when I backtested it, the indicator that I was using, and I don't know what it was called, but the indicator that I was using just did not seem to have any efficacy. Could mark out, well, I don't see why it would, but there could always be interesting things with mark-offs, right? Oh, okay. I was just thinking for a second, like I haven't been bothered by work this morning, like nobody at work has said anything, and so I'm kind of looking like, okay. Number just called me from a really weird number. I don't know what that was about. Yeah, I wish I could find. Should we keep searching? Because I swear I had something. Maybe it's if I go this way. This could maybe make it easier for me to find. If I open up the Ninja script editor. So I almost certain that I would have back tested it. Although there is some that I did a really long time ago that aren't on here anymore, right? I think CADF is the one that's the co-integration. Yeah, that one is co-integration. Oh, is it dimensionless PFE? Yes. $6K offer. Oh yeah, you're right at 16. Trade with Tyler. More on market order imbalances. Can you give us a quick blurb on how you view the bid ask columns? Do you ever hit the reset button on that to clear the board? It's almost like an order flow candle leaving behind a footprint. Yeah, it kind of is. So I do not often reset the inside columns because the thing that's useful about the inside columns, if I reset it right now, is like now I know, okay, how far does it come back? You know? Like if the stuff that's back here is like so long ago and it doesn't matter anymore, it makes it hard for me to determine like how close am I to the previous swing high, swing low, and so that's why that's kind of useful. But in terms of like the bid ask columns, the key thing that I'm looking for is what is it right now, and then what is it if we trade. So like we're actually having some interesting stuff. I should probably be talking about that, right? Because we just saw that there was about 1,600 or so on the bid, but then when it traded down, 4,000 traded. So there is an iceberg at 15.5. That is something that you will very commonly see one price below the high of the day as a level break. So in the current situation, it's a 50-50. A level break on a trend day, you always take it. But today, it's not a trend day, so it's 50-50. But that could mean that we could see a breach of these highs here. That's something that you will tend to see before that happens. I bet you that if I took it, that it's not going to happen. Okay, now on the split side, there's 4,800 at 16. That's a lot. That's a lot, relatively speaking. Now, in this instance, I'm going to bet you that in order for them to make 16 go bid, that it will take more than 5,000 contracts to do it. Because it is a high, and it is 16, which is an even number, so there's going to be liquidity there. So just know, there's a little bit of liquidity that they're going to have to get through if they really want to breach new highs and get up there. They could totally do it, but that's one thing kind of working against the buyers. Okay, but if it's at another price that's not so key, something that you can see happen is it all pulls and then it ticks up on only like 200 contracts, right? So that's either somebody was spoofing there, or the market maker has just changed his mind and doesn't want to provide liquidity there anymore, right? So those are all kind of like little tea leaves that I can kind of use to kind of get an idea of what is going on in the order flow, right? Ultimately, I'm trying to determine. So you see 66.17. I can predict pretty well. In fact, this one may actually take more than 10,000 contracts to trade through it because it's such a, it's an even number. 16 is half of a handle, so you'll almost always see a lot of volume trade at those prices. Okay. So I can kind of use these things to predict, okay, this is how much I think should it take to clear it, and how much does it actually take? And then when I see how much it actually trades, that might change my expectations. But they're all kind of tea leaves that I'm using to read what the current conditions are that I compare against what my expectation of the flows for that day are going to be. Cool. Yeah, okay. I hope that helped or answered the question. Oh, so I was thinking, I guess I don't have a Hearst exponent one. Let's go look for the Ninja Trader community. What is it called? User app share. That's what I want. Let's go to the Ninja Trader user app share. Okay. And then I can type it, search for her keyword Hearst. The Hearst coefficient indicator. Oh. The Euler indicators have been some of the best ones that I've tested. They're usually kind of like more break even, but like most indicators that you do are not break even. They're just like straight up negative. Sounds like it's close enough. I got like 30 minutes. That might be enough to make this work. You win long? I mean, probably when I would have taken the trade, it's probably too late. But, you know, when we first started talking about all of this, you know, the trade of buy 15.5 and sell 16 probably would have been a great trade, right? Because there's clearly a lot of liquidity on both sides here looking to trade it. So you're going to see, you know, that's an area where you could probably get in and out on both sides really well. So... Tools, import, NinjaScript add-on. It's like we downticked though. Looks like the offers are winning there. I suppose if I still was really believed in the short, which I don't think I can because we've seen too much net buying. I can hold the swing because I think the swing should be something that I can hold for multiple days. And I took most of my profits anyways, right? But you know, maybe that large amount of liquidity would have been a good place to try and go short. Okay. First coefficient. Oh, here's the fractal dimension indicator. Oh, it took it a long time for it to import it. Yes. Let me reopen my NinjaScript editor. So one of those things that I kind of hate is that when you import something into NinjaTrader, there's not any clear way to know where it actually goes. So I can come in here, actually open it up. Oh, okay, so it's this AUN Indie. He put it in his own namespace. Yeah, there it is right there. Oh. Okay. Sorry, what was the other one? Cybercycle. Oh, this is what I need. There we go. Okay. I need to add his namespace in here. And then what is it called? Elder's Horse Coefficient. That sucks. Okay, so for starters, we're going to have to modify his indicator a little bit because he does not understand how to use NinjaScript properties correctly. Do not set brushes and properties relating to the look and feel of your indicator as NinjaScript properties. Just the length and SSF length should be what it needs. Okay. Okay. Man, that's thick at 15.5 now too. That makes me a little bit less optimistic about them pushing above 16, at least in the near future. Okay, so now the next question is, what are the defaults? 30 and SS link is 20. 30, 20. Ooh. I think I want to do this on a 5-minute chart. I don't know why, I'm just kind of feeling like it. let's add it onto the chart here. Okay. I see. Oh, can close that. Below 0.5 means the process is behaving like a Brownian process. Yeah, I was just coming back here to see if they said anything. It is not. So does that mean above 0.5 you go long and below 0.5 you go short? Okay, you want me to combine it with an SMA then? Or we'll do HMA trend. Trend equals HMA period. This right here is period, right? Length is 30. Union script property int period get set blah. So if is rising trend and first is greater than 0.6, enter long, if is falling trend and Hurst is greater than 0.6, enter short. So within the look back window of the Hurst. Okay, let's just add two of them. Int length get set. I don't know what this other thing is. I'll just make a property for it too. This will be really raw because I don't really understand the indicator a whole lot. We'll add another one. Ninja script property. Double. Threshold. Get set. And threshold equals 0.6. Greater than threshold. Oh. Myhurst. Myhurst of 0. Build. 10 minutes. Can I make it? Can I make it? Kind of curious how much it came back there. Oh, did I not get the... Yeah, I didn't get the using declaration. Let's fix that. Again. But no, I had to take that. Well, I get... This is why, like when it starts getting like that, I just avoid those areas, right? It's like... I want to do something where like nobody's paying attention. And that spot, it's like everybody's looking at it, you know? Okay, this is going to be really weird, but I think we can do something fun here. Strategy analyzer. This might cause me to start skipping frames and doing weird stuff like that. Okay, so just to warn you. Euler Hurst. Backtest type optimization. Yes. I guess we'll do it on a 1 minute chart. Okay, so right away, something's not right because I should be getting a bunch of properties. Oh, I know why. It needs to be public properties. Now this should update over here when it's built. Taking longer to build than it normally should. Okay. Aha. It updates. Okay, so I'm gonna do all of these from 10 to 10 to 60 and increment by 5. There's probably a bunch of other things that I should change about this strategy, but let's just get this working first. Like, I don't have anything to do with like profit taking and any of that. It's just like long short, which is probably not going to be very good. You would increase it to about 400. Okay, well, let me try it just this way first and see what kind of results it gives me. We'll just do it on this year, because that will at least, you know, like, does it even take trades, right? Like, we're still debugging it anyways, so. It's kind of a strange number of iterations, 1,331. I need to do something so that it does 7 more. That's going slower than I would think it should. Okay, well, let's just let it do its thing. Interesting. So as the treasuries are pushing back here, they are doing quite aggressively. So I think I could say now that the book has gotten thick. Although often when the book just all of a sudden gets thick like that, you're kind of like, oh, you know, we're on an uptrend. Clearly, this is like some big players involved in here, and it's probably just going to continue. But in this case, like, it's enough that I don't actually know what's going to happen. It's a little odd that it's just all of a sudden got so thick here. Somebody's clearly doing something, though. Oh no, did I just crash? No, okay. Whew. I'm like, did I just crash Ninja Trader? That'd be the sort of thing that would crash it, to be honest with it. You've never used it. You've done it in Python. Yeah. Well, these are kind of some of the advantages of Ninja Trader, is it's got all of these tools to do stuff for you automatically that are quite nice. Let's close this window right here. It does kind of seem like it's hung here. Ninja. Oh yeah, jeez. Okay, so one of the problems that Ninja Trader has is that it tries to keep all of the results. There's actually something in the indicator that I can change. I forget what it is, but you see, I've like run out of memory. So I might have to end the stream without telling you. I'll post in the Discord. I'll post in like the Ninja Trader program, Ninja Trader channel, what it comes out with, and we can continue it tomorrow if we want to. But it looks like I've got to get going, and this is going to take a little bit longer. Like, we've only got 2 minutes left, so if it doesn't end within these next 2 minutes, you'll just have to go on Discord to find it. I'm going to bet that what I have right there ain't going to work too well, though. But it's just kind of the first step, and then you kind of refine things based on what you find, right? I'm hyper skeptical about the fractal stuff actually doing any good for you, but let's see. It's getting hot. I can hear the fan on the computer turned up. And I've used all the memory. Used all the memory. I haven't dropped a frame yet though. That's funny. I'm probably gonna have to kill it and go back and tell it to not save all of the trades. Yeah, now it's gonna start doing funky stuff. Okay, guys, I will catch you tomorrow. Stay